Hey guys, welcome back to the Quant Capital FX, and today we will show you how to trade price action with Fibonacci retracement tool. This is the best price action strategy for small accounts, as we jump into the trade like a sniper. Before we continue, we want to note that we created a Telegram channel as well, where we post a lot of educational content as well as our trades in real time. So make sure you subscribe. For now, let's move to the charts. Here's pound Swiss, 1 hour time frame. So, in an uptrend, to draw the Fibonacci retracement tool, we set the base at the recent swing low and connecting that with the recent swing high. So let's do this. What we want to see is price rejection of the 0.18 Fib zone, which is golden retracement ratio. We're always looking for a 0.5 Fib retracement as well as zone between 0.5 and 0.618, which is also effective level, especially in combination with other confluence factors, which we will describe later. You can see we have multiple candles that reject the 0.618 zone, which is great. But we need to wait a bullish candle to form before an entry, as price can easily break 0.618 zone and fall further. So when this bullish candle was closed, our rejection is confirmed. And we enter the trade right here, with a stop loss below the longest wick. As you can see, it was easy 100 pip trade. So moving on. Here's pound Australian dollar, again 1 hour time frame. In a downtrend, to draw the Fibonacci retracement tool, we set the base at the recent swing high and connecting that with the recent swing low. So let's do this. Remember, we are looking for a candle that rejected our Fib retracement levels with a long wick, meaning that price failed to push higher, which means momentum loss. As we can see, price rejected 0.5 Fib zone with a long wick, so we jump into the trade when this rejection candle was closed, with a stop loss above the wick. And boom, price turning down, around 400 pips. But let's put our Fib trading into higher level. We can do this by combining our Fib rejections with other factors, such as support and resistance rejections or 50 EMA rejections. So let's do this on an example. Here's SPX 500, again 1 hour time frame. As you can see, price is in uptrend here. So let's draw our Fibonacci. Boom. So as you can see, price rejected 0.5 Fib level and the 50 EMA Fib level right here. Which gives us more confidence to enter the trade short. We can also see that price came back and rejected the 50 EMA and 0.5 Fib level again. So we could enter the trade here or here. With a stop loss above the longest wick. And boom, price turning down. We could also combine our Fib rejection with a support or resistance. Let's do this on an example. Here's pound Australian dollar again, 1 hour time frame. We have already established our dynamic support zone. So right here we are in a downtrend. Let's draw our Fibonacci. and as you can see, price broke above the resistance and the 0.618 Fib level. And then came back to reject it. So we could enter the trade after this rejection candle closed with a stop loss below 0.618 Fibonacci level. Let's do this. And as you can see, it was easier to 100 pip trade. So if you want to get real-time analysis like this, our real-time trades, go down below and subscribe to our free Telegram channel. We do not have any VIP section or paid signals. So press the like button if you like this video, subscribe to our YouTube channel, and see you on the next video.